Welcome to Phillip Highlights. I'm Tiffany and I'll be serving you the latest news of the week. Your news, our business. China's top leaders pledged to step up policy support for the economy amid a tortuous post-COVID recovery, focusing on expanding domestic demand, boosting confidence and preventing risk at the July 2023 Politburo meeting. Specifically, the government will boost demand for autos, electronics, household products, and promote tourism as well as property sector. In addition to that, China will implement its macro adjustments in a precise and forceful manner and strengthen counter-cyclical adjustments, as the government sticks with a prudent monetary policy and proactive fiscal policy. We view this development as positive and timely, as this will boost sentiment and restore confidence among investors. Japan's headline inflation accelerated marginally to 3.3% year-on-year in June versus May 3.2% year-on-year, below market consensus. The smaller than expected inflation reading was due to deceleration in inflation for food, housing, furniture, and household utensils, while the cost for fuel, light, and water deflated. Meanwhile, core inflation edged up the same momentum with headlines by 3.3% year-on-year, marking the 15th consecutive month core inflation remaining above the Bank of Japan's 2% target. Despite Japan's inflation looks more elevated after the pandemic, pre-pandemic average 0.7% year-on-year, the source of price pressures was mainly a cost push factor. On that note, we believe Bank of Japan is still not keen to change its ultra-loose monetary settings currently to continue providing support to the economy and ensure the 2% price stability target can be achieved sustainably. Malaysia's headline inflation moderated further in June at 2.4% versus May 2.8%, broadly in line with market expectations. Around two-thirds of the 12 total items in the CPI basket saw disinflationary effects, especially for food, transport, restaurants, and hotel categories, indicating the broad easing on inflationary pressures. As Malaysia's inflation was not as severe compared to some advanced economies and is seen to be easing gradually, we believe we are near the tail end of the tightening cycle in line with the regional markets. While this year is expected to be more favorable for the investments than the previous year, it is important to stay watchful for any market volatility. PhillipCapital Malaysia provides a comprehensive list of products including discretionary private managed accounts and unit trusts that are offered to retail investors, high net worth individuals, corporations, and institutions. Whether you want to DIY, seek for advice, or let the expertise fully handle your portfolio, our platform can cater to your needs and preferred way to achieve your financial goals. That's all for today. Stay tuned for the next Phillip Highlights. This update is brought to you by PhillipCapital, your partner in finance.